What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification button as well. That way you're notified whenever we release new videos. We release videos every day throughout the week, once on the weekend, but we also release bonus content from time to time. So having that notification button hit will get you alerted to whenever we release that bonus content. Make sure you also follow us on X at Bullish Chips. We give real-time entries and exits for our scalps and day trades, our mid and long-term trades as well. We also give further commentary throughout the day about price action for SOXL, how the internals look for the QQQ, and just any other information we think might help benefit traders throughout the day. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action will take us in the future as well, based off of our trading strategy and our charting strategy. That charting strategy is based in the strat. If you're not familiar with the strat, it's very simple to pick up. If you stay with us through the video, you'll have a good hang of it. And I've also provided some information to free documents in our description for this video. But again, if you just hang with us through the video, I'm sure you'll have it pretty much picked up by then. And then if you want to dive into it deeper, you can. But it's basically based off the principles that a candle can only be a 1, a 2, or a 3, basically an inside candle, a candle that goes above or below the previous candle, or an engulfing candle. So there's only 3 types of things a candle can be, and there's like 6 basic reversal patterns that provide very clear entries and very clear targets for exits. There are also continuation patterns that provide very clear entries, but you have to kind of then use your judgment of price action based off of past price action where your exit may be. So I like to stick to trading the strat reversals, very clear entries, very clear exits. And it also brings into play broadening formations, which basically drawing lines from highs to higher highs and lows to lower lows, showing where price action has been, but more importantly, giving a high percentage chance of where price action will take you in the future. So again, it's based off the strat. If you hang with us through this video, if you're not familiar with our videos, you'll have a hang of it by the end of it. So just stick with us here. The agenda for today, we're just going to do a quick recap of today's price action, talk a little bit about our trades, do a quick wide view of price action for SOXL on the week, the month, the quarter, and the year charts, and then we'll dive into setting our 4-hour markers so that we have our triggers and targets for tomorrow in both directions. Whichever way price action goes, we'll be ready, and we'll have our entries and our exits known beforehand, so we can already know what we're going to be doing for the day. So if we get to the charts here, we can see today was a 2-down hammer, and is exactly what we were looking for if you watched our video yesterday. One of our favorite reversals is the 3, 2 down, 2 up. The entry being at the high of the 2, the exit being at the high of the 3. So we do have some magnitude to work with tomorrow if we do get the 2 up on the day trigger. We're still below this year flip, so the year is red. We did dip below the quarter flip, so for a small amount of time, the quarter was red, leaving only the month green. But again, if you look at the upper left-hand part of our chart here, we've got our time frame continuity indicators. We've got the day that was red, the week is red, the month is red, the quarter is red, and the year is red. So we've got conflicting times here, and that shows why we're going sideways action, meeting pretty heavy resistance here at this year flip. You can see we've had it as resistance once, twice, 3 times, 4 times, 5, 6. We poked above it late last week. Thought we were going to have support when we had this bullish engulfing candle, which in the strat world we call a 3, which was green and not red. So looked like we were going to get support from that year flip level, but again broke back through it, and you can see where we're at today. We've closed this gap. We'll get rid of that here when we set up our triggers and targets, but we'll keep it up for our review of today's price action when we go a little bit more granular here. So we did get the 3, 2 down, looking for the 2 up tomorrow. This is setting a a more concrete higher low than this 3 did back here, right? When we had this higher high from the day perspective. Initially, this went 2 down before it went green 3, so we did have a soft higher low here because it made the higher high, trying to lock in that continued uptrend, but we broke down through it. So the soft higher low did not hold. It was right at that year flip. This, if we go 2 up tomorrow, will be a more concrete higher low on the day perspective when looking at this low, and especially looking at this low. But we still have room to make a lower high, right? Even if we go 3, 2 down, 2 up, it's not a 100% chance that we're going to go complete the strat and possibly even overshoot the high of the 3, right? It's just what there's a high percentage chance of it doing. So there's always a chance that we go 2 up, maybe get halfway through the 3, price action rejects. You can see that this level right here is somewhat of a level, right? We don't have any like Fibonacci's or anything out here to try and get an exact number, but you can just visually see that this level right here is kind of resistance, support, support, resistance. So we could have where this flips, we end up with like a failed 2 up tomorrow, setting a lower high, Friday if we go 2 down again, maybe trying to go attack this this other gap from beginning of June, June 23rd. So that gap's been out there for a little while. We're getting closer to it. We've closed this one. If we do flip the month red, then we're full time frame continuity to the downside. All time frames will be red, and that gives you more momentum to the downside. It brings back in play this monthly downtrend line. And again, if you're not familiar with our videos, check out our bonus content for a breakdown of how we set up our charts. As you can see, we don't have a whole lot of indicators on here when we're looking at things from a day-to-day swing time frame, right? Long-term, mid-term, whatever it is. When we get down to scalps and day trades, we do have a little bit more detailed chart. But from an everyday perspective, we don't use a whole lot of indicators. We keep RSI out here. But we don't have a lot of other indicators, just some broadening formations, and those are different colors based off of the time frame that those broadening formations were formed in. So we are able to just quickly look at a chart and see exactly what's going on, right? We know we've got a downtrend. We don't know where it's from, where it began. We can look at the details of this line, right? But just quickly looking at it, we know we're still dealing with the monthly downtrend line, the year flip, so we know there's going to be conflict here. We've continued to just trade in this range of 24 to 28. We've been, as you can see in our Twitter account, we've been buying puts up here at the tops of the range, calls down here at the bottom of the range. We didn't do anything to swing today just because of how price action went. We'll get deeper into that when we break down today a little bit more. But you can see that we've been in this range for 8 weeks now. And even with the look below and fail here and the look above and fail here, possibly another just slight look below and fail here, we're just trading within this range. So keeping in mind this weekly uptrend line that we do have here off of the bottom of these weeks. So you do want to try and hold that if you are a bull. But again, we'll be ready for price action whichever way it goes. So even if it does go down, we'll have triggers and targets set up to go down. Let's just break things down from a shorter time frame perspective, and we'll bring in a little bit of a few points of reference here. But here's today's price action. We had our opening print right here. This is where price opened. You can't really see it because it's all combined with the previous low a day and the 4-hour trigger to the downside. So immediately at open, we triggered the 4-hour trigger to the downside and the day trigger to the downside as well. So it was easy for us to just refer back to our notes from yesterday, and we could see what our trigger, 2610. 2610, our first target was 2584, 2545, and 25 flat. So we can see that we quickly got to this 25 flat. That was the expected move of the week by the market makers. Blew through last week's low and the overnight low. Those were really no problem. We weren't worried about trying to sell there. Number one, because the magnitude wasn't that great, but number two, we're looking at the internals for QQQ. We could see, we were already starting out below the zero line on vol QD, below the zero line on breadth. The tick was below zero line, so we knew that puts were on the table, and we had momentum. So our first target at 25. We pretty much blew through that as well, so we set a stop loss there on the calls that we entered on the 1 minute. I don't even think it was a lower high. It was just like we were talking about at the beginning, just a second ago, with internals and price action. It was more of just getting in, not totally blind, but oops, that's Monday's price action. Why are we all the way back there? Come on, Thinkorswim. So let's go to today's price action on the 1 minute. All right, so we could see here that we got the, that's what we entered on. It was, yeah, so we got it in on a lower high here. So price action did initially push up. Wait, no, this is what did I? Yeah, that's yesterday's analysis. Why am I apologize here. Let's get it together, Chris. There we go. But let's break down to the 1 minute here, and let's bring it in. Okay. Here we go. So there was a lower high here. We didn't get in on the initial lower high. If you look at our X account, we did get in on the second lower high, basically confirming a downtrend here, even though we're working off of a lower low immediately from the beginning of the day. So we got in on the lower low here. Again, there wasn't a lot of magnitude to last week's low and the overnight low. So we hung with it. Our stop was put above this lower high up here. Luckily, we got the lower high again here, and then again it fell through 25, very quickly. It didn't even hang around for one 1 minute candle like it did at the last week's low and the overnight low. Just went straight through it, so we went ahead and set our stops there. We got the initial bounce off of the top of the gap, like we always talk about. If you're familiar with the channel, it's nothing new to you. We did get that initial bounce, and then we did get a higher low, higher high on the 1 minute. But by that time, we're already at 9 o'clock, so we're 30 minutes in. You need to switch to the 5 minute and get a better judgment. Of course, we've got our multiple screens up with different time frames, but just dealing with one screen here. You got to switch to your 5 minute. This just all that we did with the higher low and higher high on the 1 minute was create the lower high on the 5 minute. So again, we hung with it. Our stops were here at the 25 flat level. We got the lower high. We got the flush down. We did sell with the 2 up. We were targeting the gap close, right? We tweeted that. But then once we got down to the month flip, we knew that there was pretty heavy support there, so we went ahead and set our stop basically whenever the next 2 up would trigger. So we did get stopped out at the bottom of the gap. So we could have set a sell right here at the gap, the limit sell, and it had it sell right there when it hit. But we wanted to make sure that we got any more downside action if there was some. So we just continued to move our stop down from to the top of the candle. Right, and so once this candle closed, we had our stop moved here immediately, and within a couple minutes, it went ahead and stopped out. No big problem. That was great profit that we got from up there, and we did enter on calls with this higher low here. Actually, it wasn't a higher low if you really think about it. We had this lower high here, lower low. But it was basically just going off of the fact that price action and major price action, this was a higher low, right? This is just a quick lower low, lower high. Basically, this was just part of one move, but it appeared more like this was the start of a better move up with a better higher low, just based off of basic price action. We did tweet about this. It violated pretty much all of our rules. We knew that this was a more risky play than what we normally play. But we were willing to take it with the swing. We had a put for the September 5th that we sold pretty early in the morning for a big profit. That let us focus on getting a scalp to day trade early in the morning to make more profit. And we still have the puts for September 19th and November, I don't know, whatever the monthly is for November. We have puts for there as well. So those are still green, and we're just kind of letting those cook in the background in case we're going to continue to fall. But we wanted to focus on making some good scalp money, because the last few days have been kind of flat before yesterday. We got the big drop, but we knew that we had further down that we could go through that thin structure before we found real support, and still could create a higher low on the day perspective. So we felt that we had done that here. We got the higher low here. We bought calls. We didn't end up getting a lower high, lower low. We just continued to ride it up until this second higher high. But at that point, we were looking for overnight low. Like we said, the first target was overnight low. Second target was previous low a day. But we did, unfortunately, at that point, get the lower high. And when that did trigger, we went ahead and exited. We had stop set up. So if it did trigger, just because of basically sentiment over the past couple of days, the markets are down. They're hurt, especially on the tech side of things. So we wanted to just make sure we locked in any profits. We knew that calls. We were tweeting about this over and over. We were really just looking for the lower high on the 1 hour. So we were willing to take scalps to the upside on shorter time frames to get that lower high. Now we didn't get the lower high on the 1 hour today. Could it be that it gets locked in tomorrow with the first with the first hour candle? Possibly, but right now we don't know if we have the lower high on the 1 hour. So we took our money on those calls, and then we just basically sat on our hands for the rest of the day, because we were trying to wait for something to if you remember, the 1 2 up 2 down almost triggered on the 1 hour. So we had the 1 2 up, and then if we would have went 2 down on this candle, instead of going 2 up, that would have triggered the 1 2 up 2 down reversal, targeting the low here, which if we reach this low, that would trigger the 1 2 up 2 down on this 1 hour, again with the target of being down here back at the month flip. So we knew that there was still possibly good money to be made if this was the lower high on the 1 hour. So we basically sat on our hands, and initially we were very close to triggering it, but then it just climbed up the rest of the day. No problem there. You don't have to make money on every single move of the day. We made very good money, like I said, with the overnight swings, with the intraday scalp to the downside and the scalp to the upside. So we were content with sitting on that. Just getting ready for tomorrow, watching price action, seeing if we were going to get that lower high on the 1 hour, which again we never did right here, right? But we're back up into last week's price action, back up into what price was expected for by the market makers. So we'll just see if we go back up here, test this daily downtrend line that has been created now at this point, which does line up with the week flip. So tomorrow, even if we do get that push up, look for that resistance at that week flip area. That also comes into play with a daily downtrend line from back in July, the end of July. So we're still contending with a lot of resistance here. Even just slightly above this is last week's 50%, which you can see here was resistance for 2 days before we had the breakdown. So while it does appear we probably put in a higher low here on the daily perspective, we just got to keep in mind where we're at, what we have above us, and know that we could just turn back down to the downside. We've got another gap here that's not too far below that we could fill. So we'll go ahead and remove that there, and we'll remove it on our other charts as well. Right. And let's go ahead and take a quick look at things from the week perspective, because we did get the 1 2 up 2 down, right? So it has triggered that reversal. So ultimately, if this were to continue and run to its completion, that would take us to the low of this candle, right? The 1 2 up 2 down always triggers the low of the candle to the left of the 1. So here's the 1, here's the low, candle to the left of it, the low being 22.57, which is the top of this gap. So we knew that we still ran the risk of coming to this gap and it even possibly bouncing off of it, but possibly just closing it, right? So there's still a long ways to go from this further weekly uptrend line that was set back here in early April from the big drop. So we do have further room to drop. You see our daily broadening formations come down here as well, right? It's a pretty wide broadening formation from a daily perspective, and we've got room to pull back. We could make a lower low on the on the week, right? Looking at this soft higher low that we had here, right? This being the real higher low locked in. This was a soft higher low because again, once again, it's part of a three. It went two down and then two up, so it's more of what we consider a soft higher low. This is a higher low here, a more solid one, right? So if we do break that, that's a lower low there. We could break this lower low here and test the lower low here, which has a double gap, right? The gap from back here, this is the week chart. So on the day perspective, there's a gap here and there's a gap here as well. So plenty of room to go to the downside. We have plenty of targets if we go back down that way. We just have to, again, continue to rely on price action. Looking at things from the month perspective, let me take the broadening formations off of here. So we are back within last month's price action, which we already knew, right? Went below last month's 50% line yesterday. So we're trying to avoid going red, putting us back below last month's price action. If we do that, we're basically just triggering like a two up combo, a combo two up, two down, right? And then the target would be the bottom of this candle here, being that 1604, which, you know, it could happen. This is kind of thin structure from like a monthly and weekly perspective. So remember, we had a run of like 5 straight weeks, green weeks, then only 2 red weeks, and then 7 straight green weeks. So there is thin structure on the week perspective. On the month perspective, if we're looking at the quarter, that brought us back inside. Oops. Oh goodness, what did I just do? Take that off there. Sorry. If we look at things from the quarter perspective, we are just almost, let's see, the higher is 25.84. No, we're just barely inside last month's price action now. So this is looking more like a failed two up on the quarter. Now again, we've still got a couple months left, or one more month left to go in the quarter. So this could, come back down and go back up all before the end of the quarter. So we're not predicting where we're going. I'm not predicting that's going to be a failed two up, but just keeping in mind where price action is putting us. Looking at the year, again, this 1 2 up 2 down is almost back in force, right? So if this current price goes below the low of this candle, which is 23.50, so another basically $2.30. If we go down another $2.30, this 1 2 up 2 down puts us back in force. And if you remember, if you're familiar with our videos, although it has triggered and almost hit magnitude, it has not yet gone to magnitude. The magnitude is the low of this candle. It's the candle to the left of the 1. So this 621 is the low. We went to 723 during that dip in April. So we have not completed the strat. You can see there's still a little bit of room down here on the quarterly broadening formation as well. So, the downside is still in play, and the more that, let's go to the week here, the more conflict that we have on the time frames, looking at the upper left-hand side, right, we're red, green, green, red. So that just, more indicates chop from a higher time frame perspective. And if you look at the week, we've got 1 2 3 4 5 6 7 8, almost 9 weeks of basically chop here in this 24 to 28 range. So that's a look at price action today, the wide view of price action for SOXLs. But let's go ahead and get into setting our triggers and targets for tomorrow. So that entails moving what we call our 4-hour markers. If you are not familiar with these, again, check out our bonus content. Check out our video for precision trading, and it goes deeper into exactly what we're doing here. But I think if you just watch, you'll have a good hang of what exactly we're doing, right? So we're just taking the previous low a day mark and moving it to today's low. We're taking let's remove the opening print mark because that's going to no longer be valid tomorrow. There will be a new opening print for tomorrow. We're going to take the 4-hour trigger to the downside and move it to the low of the second 4-hour candle of today. We're going to take the 4-hour trigger to the upside, and we're going to move it to the high of the second 4-hour candle of today. And we're going to take the previous high of day, and we're going to move it to today's high. All right. So we've got previous high of day, the 4-hour trigger to the upside, 4-hour trigger to the downside, and previous low of day. That's what we'll see tomorrow on tomorrow's charts. We can go in here and change the overnight high and overnight low, but again, those will be different by the time we get to tomorrow morning. So we'll just move them for now, just for charting's sake. so we can have a good idea of where things are at. Oops, jeez. All right, so this would be overnight low for right now, and we will move our overnight high. Overnight high, let's move it. Come on. Sheesh. There we go. And that's our overnight high. So we've got our overnight high, overnight low charted out as well. But we can see here, we know that if price action goes to the upside, past this high, that triggers the 1-2 up. More importantly, the 2-1-2 up reversal. So that gives us a very clean entry, very precise entry at the high of this candle, which is 25.88, and a very precise exit, which is 26.11. Now, what that will do is trigger the 1-2 down combo 2 up, targeting the high of this candle, right? The candle to the left of the 1. So while it does give us a very clear exit, that's a place where you could see price reversal, or if we continue to push through, the next expected stop for price would be the high of this candle, right? At least from a strat perspective. And again, this is a proven and repeatable strategy, so it can be used not only with SOXL, but with any ticker symbol out there. But this gives you where the high percent chance of where price action will go based off of the price action that we've had. So again, there's a lot of levels to fight through to get there, right? Just previous high a day being one in its own, right? That's usually a pretty strong inflection point, no matter what your target is. So breaking through previous high a day, if we do that, maybe it does give us the momentum to go up there. But again, we've got to break through the week flip. We've got to break through this daily downtrend line, really two of them here. And we've got to break through last month's 50%, which was resistance for over a day and a half, basically, right? 2 days, basically. That's what it rejected off of for the big drop. So a lot to fight through, but there is a high percent chance that if internals are with us, momentum is with us, we could reach that high, right? If you look at the RSI, we're pretty low down here. It wasn't oversold, but it's still went low and seems to be pointing back up. So if that just continues to go up, we can possibly look for it to get back up into the overbought area, right? So let's go ahead and mark up our notes, right? So sorry about that. Let's go to our notes, right? These notes are for tomorrow, Thursday, August 21st. Today is August 20th. Tomorrow there will be 89 trading days left in 2025. The close price today was 25.80. So we know we need to flip this red. So the week is now no. Oh, I'm sorry. The week is now red. It flips green at 27.10. The month is green. It flips red at 27.30 or 23.57. The quarter is green, which it flips red at 24.38. And the year, of course, is red. It flips green at 28.13. Again, we have our market maker's expected move. If you're not familiar with this, watch our weekend video, and that shows you not only where we get the market maker's expected move, but how we chart it on the chart. But the $2.37 expected move from the close price on Friday gave us a expected move or expected range for this week of 29.74 and 25 flat. Again, that's like a 60% chance, 60 to 70% chance that price will be within that. So that leaves 30 to 40% that price sometimes will go outside of the range. Again, we saw that last week. So it's not surprising that we saw it again this week, especially from a high beta stock like SOXL, or high beta ETF, I'm sorry. We know we have gaps above at 48 and 59. We look at our gaps below. We filled this gap today, so we can get rid of it. And we know we have the gap at 22, we have the gap at 15, the gap at 9 and 975. That's that double gap that I was talking about. And then one last gap down there, 874. So we've still got some what people consider magnets for price action. All gaps like to get filled, so we want to keep that in mind. So we just keep that on our charts, right? The strat that we will be in will be a red 2 down and a green 1. You don't need to make a red 2 down, just 2 down, green 1, two down, and that would trigger at 2480. 2480, right? That's the low of the second 4-hour candle of today, right? That would trigger the 2-1 2 down reversal. So with the reversal candles, that's why we like to trade reversals more than we like to trade continuation patterns. The reversals give us a very clear entry and a very clear exit. The entry is the low of the second 4-hour candle, which was at 2480, and the exit is 2366, which just so happens to fall above the weak flip, which was support earlier today. So 2366 is our magnitude. We can look at extended targets here. If we do make it there, we can look at the low of this candle, which is 2295. I don't really like to put too many extended targets on the 4-hour just because they roll into the day, so we won't worry about another extended target. We did hit this lower low, so we'll take that off of there. So we have expanded the broadening formation once again, and we know that the next lower low would be 2257. Again, the magnitude, whenever you have a flip on the 4-hour, that magnitude is the trigger for the day. So we'll go ahead and move that right now, but we'll come back to the day in a minute. We'll get our trigger and targets to the upside first. So we have a 2 down, green 1, 2 up reversal. So we'll have a trigger and a magnitude. So the trigger to the upside, again, is this high of this second 4-hour candle for today, which is 2588. 2588, and the magnitude is the high of today, which is the 2611. So not as much magnitude there, but we do need to make note that that would trigger the 1 2 down combo 2 up. So we'll go ahead and put that in here as a side marker. 1 2 down combo 2 up. And so that magnitude is the high of the candle to the left of the 1. So that's this 3, and that's 2786. So again, we've got some resistance to go through. What I kind of like to do here is let's do this. We'll make this our second magnitude, and we'll put a couple of targets in between the two magnitudes, just because we are going to have that resistance that we've got to fight through just to get through to this second magnitude. So it just makes me feel a little bit more comfortable knowing that if I'm just looking at my notes and I see, we go above 2588, okay, cool, we've triggered the 2 1 2 up, and we get to 2611. And if we get to 2611, we've triggered the 1 2 down combo 2 up, and I know that it's going to take a while to get to that 2786, so I want to know what the other inflection points are on the way to that, and so that's why I'm just going to put these targets in between the two magnitudes. So we've got the 2611 as our first target, and then I would look at the high of this 1 as the second target, so 2668. 2668, right? That's the high of this candle right here. Right, so if we break above this, the high of this candle, which is today's high, the next target I would have is here. The following target would be the weak flip, which is that 2710. 2710, right? Now, we can look at that 2756 as another target because that was resistance. So I'm going to go ahead and put that on there as well. 2756, and you may say, why make another target so close, 20 cents within the magnitude? Well, we can look at today's action, and 44 cents of price action comes out to 1.68% move. So take that in half, that's 22 cents. That's what's that, 65% move, right? 67% move. I'm sorry, 0.67% move. So almost, a 3/4% move on 20 cents. So it's nothing to shake your head at. Again, if you want to get money, just a scalp from 56 to 86, you probably want to load up on contracts and you buy in the money, so you can get the most profit that you could. But when you're looking at the longer range, just kind of a step ladder up to that magnitude, that's a reasonable price target to have, just based off of the price action that we had here for 4 4-hour candles, 2 straight days where this was resistance, which triggered the downside. So, All that to say, those are our extended targets to the upside. We have our extended targets to the we didn't really make any extended targets to the downside because it didn't trigger into a greater strat, right? It will put us into a greater strat on the day. So let's go ahead and look at the day perspective. And again, from a want to keep things bullish perspective, or want to keep things at least ranging perspective, you want to get that 2 up on the day to trigger that 3 down 2 I'm sorry 3 2 down 2 up, right? That triggers at 2611. So we're looking at our upside here on the day. 2611 is the trigger, and this is a 3 2 down 2 up, and the magnitude is the high of this 3. So that's what throws us into this magnitude. The high of the 3 is this second magnitude here, this 2786, right? If you look at the high of this candle, 2786 is the high of this 3. So 3 2 down 2 up targets the high of the 3. 2786 is the magnitude. And then we know, because that's such a big step, right, with all of the resistance that we have in between, we can rely on these further targets on the 4-hour perspective. Unlike, we don't need to really do that with the downside, right? So just keeping that all into perspective. Oh, those are targets. So the magnitude is 2786. And then we can have some extended targets on the day, because if this is to flip, because this went 2 down, right? 1 2 up 2 down, we've got to bold and underline so that we know we are in a 1 2 up 2 down right now. The 2 up green 3 will trigger at 2966, and then we have our further targets for if we do pull a 3 off. So those further targets leak into the extended targets for the day, or reverse that, with the day's extended targets leak into the targets for the week. So if you're not familiar with this channel, again, this 3055, if you are familiar with the channel, should be ingrained into your brain, right? 3055. If we go ahead and bring out our major Fibonacci's, and we bring out the fibs for 2020, let's go to the month real quick so you can see it a little bit easier. We can see we have our 2020 low. Everybody know what happened in 2020, and then our all-time high for SOXL, which was the high in the first week of the first week of January 2022, before the bear market, right? If we draw Fibonacci levels for that move, which is what price action has been contained in since that move, we see the 61.8 fib, which was one of the stronger fibs, right? The 61.8, the 50, and the 38.2 are the stronger of your Fibonacci levels. The 61.8 is 3055. So we're gonna leave that 3055 on our notes, especially from a week perspective, as a target, right? It's just an extended target for the day, should we so happen to have some great bounce, right? Like we have Jackson Hole tomorrow and Friday. If any, if notes from Jackson Hole, Thursday's Jackson Hole meeting come out, and or if there's leaks of what they're talking about and it would benefit the market, we may see a bounce. It's very possible, right? So who knows? Maybe we did put in the higher low on the week and the day today, right? That this could be our bounce point, right? So we want to be ready that if we do bounce, and we know how SOXL can bounce, right? 10-15% in a day is nothing for SOXL and underlying price movement, right? So that can equal big money when you're talking about options, when you're talking about even if you have shares, if you've got a couple hundred shares, you're looking at some good profit for that move as well. That we just want to keep that in mind, that could be what we've done today, is put in the higher low there on the week and the day. All right, so let's just bring up our week. Let's take out those broadening formations, right? So that could be our higher low on the week right there, right? If we continue to push up, maybe turn this hammer green, close the week green, maybe even push up back to the year flip, or even push over the year flip to get us into full time frame continuity. That could be our higher low right there, which also plays out here on the day, because again, we talked about this was a soft higher low here. We've got the higher low here compared to this higher low here. If that stays, that holds, that stays with the week's uptrend, and technically it stays with the day's uptrend too, right? The uptrend is pretty flat. It's not going straight up, right? But it stays intact because we have a high. I'm sorry, a high, a higher low, a higher high, and a higher low, right? So that that's an uptrend by definition. So even if we're only going to go back up to this 28 level, maybe 29, and come back down to continue the range, even if we do that and we make a higher low on the day once again, that's technically continuing the uptrend. So it could just be a slow grind up. You know, they tend to say that the move up is stairs, the move down is an elevator or escalators, elevator, sorry, straight down. So, you know, we've just got to try and stay nimble. We're just smack in the middle of this range, this 24 to 28 range. So right now, I mean, that's why we didn't swing anything other than what we are already swinging, right? We didn't pick up anything new to swing before close today because we're smack in the middle of the range. We'd like to make our moves on the fringe, right? So if we get down here and we see the reversal like we did intraday, right? We went ahead and played it. Now, could we have bought calls for, you know, a couple weeks out to let it try and play out, see if it does go back up there? We could have, but we're already sitting on some for the September monthly. So and we bought them at the bottom of the range over here. So they've kind of gone through the run right now. We're back at even from, or just slightly up from even from a price perspective, but they have gone through a little bit of theta decay. Now we bought at the money and in the money, so we don't have a whole lot of theta decay, but we want to get that move back up to the top of the range and hopefully poke through. If we don't, if we get another reversal signal, we'll probably at this point go ahead and sell them because that September monthly is getting a little bit closer. It's within a month now, and we don't like to keep you know, the mid and long-term swing trades where there's less than a month left on the contract. So looking to get October calls if maybe we get support here and continue to go up. If not, we'll be looking at October puts to get for the ride back down, either selling back down here, especially if we get a quick drop. You know, if IV is high, premiums are high, sell right there and either, you know, reassess and get ready for, you know, a lower high here to get a further drop, or to be ready to buy calls to go back to the top of the range once again. So it's same thing. I feel like a broken record. I'm sure I probably sound like a broken record for those that have been, you know, that are familiar with the channel, but unfortunately that's what we've had for 8 weeks, right? buy puts at the high, buy calls at the low, buy puts at the high, buy calls at the low, buy puts at the high, buy calls at the low. That's what we're in right now. And until we get any further price discovery higher to get a higher high, or lower to get a lower low, even if we do that, we're just kind of just broadening this broadening formation and still moving sideways. It's not choosing a direction. We've got to remember seasonality that's coming up. September and October are the worst performing months for tech. So, you know, we should probably be looking for a pullback at this point, right? Do we make this a lower high? Is that a lower high? Do we make another lower high here with the 3-2 up, failed 2 up, maybe just get a high here and then continue down, setting a downtrend for September and October? Possibly, and we'll be ready for that if it happens, right? We have our, you can see on the chart, it's very plain as day to see what's out there to do, and we have our triggers and targets in our notes, not only for the 4 hour and the day, but for the week, the month, the quarter, and the year, right? So we're prepared. I hope everybody made some good money today. I know we did. Very happy with today's earnings. Didn't, you know, wasn't the greatest for, you know, 2027 calls, and even those that are January 26 calls. Again, there's still plenty green, but, you know, we like to see those continue to move up. So if we can make this the higher low on the day and week, that would be great. We continue to push up and look to possibly sell. If we do get another push up, look to possibly sell those January 26 calls at the highs right before, say we're just going to push till the end of August. You know, maybe sell at the highs at end of August just in preparation for the pullback that we get in September, October. And then you don't have to worry about dealing with that. We've got our January 27 calls for a long swing perspective, and we start looking at the January 26 calls for more midterm swing perspective after we get our possible pullback in September, October. Again, possible. I'm not here to predict anything. We're just going to go where the price action takes us. So again, I hope everybody made money today. I hope this video has been beneficial to you. If it has been, if you enjoyed the video, please give it a thumbs up. It helps spread the word about SOXL and just the benefits that it provides, especially from an options trading perspective. You've got the high beta ETF, right? Depending on where you're doing your research, it's anywhere from 4 to 5 on the beta, and you've got very high delta to very low thetas, especially at the money, in the money, and very reasonable premiums for the contract. So that's a recipe for a great percentage chance of getting good wins if you're using a repeatable and proven strategy, right? So I've been doing this for years now, been locked in on the strat for years now as well. It's not the first way I learned to chart, right? But I wish it was the first way I learned to chart, because it's the easiest way to break down price action. It's the most simple way to understand price action and where price action has a high probability of going. So if my trading method can help others as well, that would be great also. So the thumbs up really goes a long way to help the channel. We're not selling anything here. Anything we provide is free. So it's all for the people, and the more people that trade SOXL, the more liquid it gets, and so that's even better for everybody that's trading. So once again, I hope everybody has a great rest of their night. Get some good rest. Be prepared for tomorrow. We've got our triggers and targets ready, and ready to make more money tomorrow. Have a good day, and I'll see you in trading.